This company is called Northern Minerals, and it's a rare earth producer. Now, rare earths, of course, viewers might not have heard a whole heap about them, but they're very interesting. The first thing to say is that they're actually not very rare. They're actually found in a number of countries, but they are both important and quite difficult to produce. Now, that's because the process is very time-consuming. It can take quite a lot of effort. It can take quite a lot of money. And on top of that, it can be quite environmentally degrading. So at the moment, rare earths and the market for it are dominated by one country, and that country is China, which has basically got a close to a monopoly on the entire supply chain. So not just mining and pulling rare earths out of the ground, but also refining them and turning them into the things that are then going to be put into products like plasma TV screens, iPhones, communications technology, wind turbines, electric vehicles, and of course a few sensitive military applications as well. Now, this company was looking to get money, and has been looking for a few years to get money to develop a refinery essentially in the northern part of Australia, in the East Kimberley region in Western Australia, to develop or to produce a product which can be put into the environment, into the batteries of electric vehicles. This company has been struggling to raise the finance it needed. Last year, a not very well-known investor, a Chinese national with a company, an investment fund based in Singapore, offered to increase its stake in Northern Minerals from around 10% to around 20%. And it's that application which has been knocked back by the government.
And Stephen, we know that the government has approved other applications from Chinese-owned companies. Do we know what's driving their decision-making at the moment?
Look, it seems to be driven, and it's difficult to say because the government, to be frank, hasn't really given an account of exactly what's driving its actions here, but it seems to be driven largely by geopolitical considerations. Now, the context here is important. China's domination, its near monopoly on rare earths, presents some really tricky problems to countries like the United States and Australia, which is anxious about Beijing using them potentially as a point of leverage or as a pinch point down the track. If China dominates, a market which is crucial not just to the renewable energy transition, but also to a range of modern military technologies, well, that produces some pretty uncomfortable and difficult questions for countries like the US. The US is anxious that China might use it to deny Western companies or even the US military access to crucial technology, that it might use that leverage to essentially hold Western countries and companies to some form of hostage when it comes to renewable energy development. There are several reasons, in other words, why Australia and the United States, along with other friendly countries, would like to develop supply chains on critical minerals that are totally independent of China. So whilst we can't be certain, it seems likely that this is being driven by by geopolitical rather than financial considerations. Australia wants to make sure that it doesn't only set up its own supply chains internally, but also that there isn't any form of leverage that the Chinese might be able to exert over the financing or over the structure or corporate control of these companies. And I suspect that's what's driving this decision from the Federal Treasurer, which was unveiled very, very quietly a couple of weeks ago.
And Stephen, we know that the relationship between China and Australia has started to improve under the Albanese government. We're starting to see movements with imports resuming. Do you think this kind of decision-making will be a spanner in the works, or is China expecting this national interest in some instances?
Look, it's difficult to say for certain. My prediction, though, is that China is probably more likely than not to let this sail through to the keeper. This is not an unprecedented decision. The former government, in a couple of instances at least, blocked Chinese investors from taking stakes or greater stakes in Australian rare earth producers. So the fact that the new government has essentially, enforced a similar sort of idea or a similar standard is not going to be deeply surprising either to the company companies concerned, or most likely to Beijing as well. Now, it's true that China has raised concerns previously. It's sometimes been quite strident in its criticism of Australia over blocks on Chinese investments on national security grounds. It was certainly fiercely critical, for example, over the Huawei decision, as well as a series of other blocks that the former coalition government unveiled. But I don't think that it's going to be overly surprised by this development, and my prediction is that they're not going to allow it to become a major stumbling block in the relationship, which is now ever so slowly beginning to thaw and return to some sort of form of normalcy.
Stephen, good to talk. Thanks so much.
Thanks, Beverly. Appreciate it.